I would like to introduce today's speakers. Larry Lagerstrom, who you'll be hearing from later in the session, is the Acting Director of Academic Programs, responsible for graduate education offerings. Today's featured presenters are Bruce Wallace and Ritika Grewal from Silicon Valley Bank. Bruce Wallace is the Chief Digital Officer of Silicon Valley Bank Financial Group. He is responsible for client digital banking experience and channel delivery services, along with the sales, development, and delivery for fee-based products, including payments, cash management, cards, merchant services, foreign exchange, and global treasury services. Previously, Bruce was Silicon Valley Bank's Chief Operations Officer, responsible for global operations and IT. Prior to joining Silicon Valley Bank, Bruce spent more than 20 years in a variety of management positions with Wells Fargo and Company. Ritika Grewal is the head of Payments, Strategy, and Solutions at Silicon Valley Bank. She joined the company in 2012 to lead the Payment Strategy and Solutions team. This team focuses on internal payment strategy and development, as well as working collaboratively with Silicon Valley Bank clients and partners to help deliver payment solutions to the market. She leads Silicon Valley Bank's partnership with MasterCard to run Commerce.Innovated, an accelerator program focused on helping early-stage companies innovating across the commerce space. Prior to Silicon Valley Bank, Ritika was at J.P. Morgan Chase. Ritika was recently awarded as one of the most influential women in payments. Actually, she won this honor for the last 2 years. At this time, I'd like to turn the floor over to Bruce and Ritika.
Good morning, everyone. This is Bruce, and we are excited to be here this morning to talk about what's happening with the FinTech revolution. So we're going to have some slides that we're going to walk through. As Beth had mentioned, we'll be more than happy to answer questions throughout the course of the presentation, and actually would recommend that you provide questions throughout the course. So I'm going to turn it over to Ritika, who's going to start stepping through the presentation. Ritika?
Great. Good morning, everyone. So I'm going to start first with a slide that we received some data from CB Insight, which is an analyst firm. And what is going on in this slide is really to help illustrate the FinTech innovation is here. What they did was use the Wells Fargo homepage as an example. Of the top half is the consumer homepage, and the bottom half is the small business homepage. And really describe all of the different companies that are innovating and attacking every single segment of banking, from lending to banking services themselves to investing. There are a slew of companies that are going after and truly disrupting banking as you know it today. On the consumer side, there's some names that I'm sure you've heard of in the markets, right? On the lending side, companies like SoFi, and others, as well as on the banking side, some of the banking startups that are trying to disrupt the way that consumers receive just the basic services that come along with a bank account, companies like MoveIn. There's a slew of companies focused on the savings side, savings, wealth management, companies like Digit that help to automate your savings, companies like Betterment, Wealthfront, et cetera, that are focused on that wealth management space. And then finally, there's a whole world of companies that are focused on sort of the payments aspect that, from a consumer perspective as well. Companies like Bill.com to help people make bill payments easier, cleaner, and with a beautiful UI in front of it. On the small business side, there's even more pronounced disruption that's happening from, again, same thing where pretty much every tab of that display from the Wells Fargo example here is being disrupted. You can look at, again, banking, lending, and credit, merchant services, insurance, all of those things are all being disrupted again by a wide variety of services. Some of the more well-known services, because they've IPO'd or are out in the market really aggressively, companies like Square that have truly disrupted the way merchant services are being delivered, giving small businesses, extending the aperture of small businesses that are able to accept card payments, as well as changing the way that people accept card payments. And then on the lending side, companies like Cabbage and OnDeck helping small businesses get access to capital in unique ways. Is there anything else that you would add on this slide?
Just one thing I would add at the macro level is I think what's happened over the past, I would say, 3 to 5 years with a lot of these companies is every single one on there is a pure digital solution. So I think what's happening is there's a lot of disruption specifically around companies coming into the financial services space without the traditional infrastructure required, with a purely digital or mobile-based experience.
Okay. Yeah, and we're going to talk a little bit about some of the main disruption that's, or some of the main drivers that's causing this inflow of disruption, and we will talk a little bit more about how digital comes into play here. So the next slide is to sort of see the parallel that's happening in the UK. It's a very similar trend where, again, consumer banking, business banking is being disrupted by a whole slew of startups. You know, obviously the Brexit news is fresh in everyone's mind, so it's a little, it'll be interesting to see how this evolves. But, you know, given that SVB has an office in London, we get a good front row seat into seeing a lot of this as well. And it's, again, very similar in nature to the disruption that's happening on the U.S. side, and attacking pretty much every aspect of banking, lending, investing, et cetera, that consumers and businesses are focused on.
Yeah, so there were a couple questions I think were pretty interesting that came up related to the first two slides. The first one was, where is blockchain? So in terms of what's happening with the percentage of startups that are in blockchain or digital currencies, and in terms of overall venture investing, there's been approximately $1 billion that have gone into blockchain startups. And in terms of where it stacks against all of the other startups that Ratika had been referencing earlier, it's probably about the 6th or 7th largest sector. In terms of where a lot of the investment dollars are going right now, it's primarily going in the lending space. It's going into the payment space, and it's also going into kind of a combination of individual finance, consumer finance, and then also into different types of investing, individual investing and consumer investing, business investing. But if you look at the trajectory around investments in blockchain technology, it is on a very high trajectory, and in terms of what's happened so far in the first half of this year, there has been no tampering of investments going on in Bitcoin and blockchain. And the second question was related to emerging markets such as Africa, Latin America, Asia. I would say, again, in terms of investment dollars, probably about 75 to 80% of the overall venture investment dollars for fintech are primarily going in North America, in the UK and EU. I think in terms of some of the emerging countries, because they still have a very high unbanked or underbanked population, a lot of the startups that are in those specific spaces are really tackling much more simplified financial services on just trying to get basic consumer products such as mobile payments into the hands of millions of consumers that are unbanked.
Yeah, and the other thing I'll say about that is, in reference to some of the other markets, is the U.S. and the U.K. are very similar in terms of people leveraging credit cards and merchant services and things like that. And in those markets, that basic infrastructure isn't even there, right? So if you go to Brazil, for example, the penetration of credit cards is nowhere near as deep as it is here, similar to what you were saying in terms of leveraging alternative ways of moving money.
Yeah. And while Ritika goes to the next slide, we're getting a lot of great questions. I'm doing my best to kind of synthesize them together because there are some common questions. So just to let everyone know, and a few of them we're going to specifically address on some future slides. So I am watching everyone's questions. Just wanted to let you know that.
Yeah, and the next slide really is meant to focus on why. Why is the financial services under attack so aggressively by all these startups? And I think it's because financial services represents 20% of the S&P 500 index. And if you just look at the names of the companies that are in the middle of this target, they are household names that have been in the business of banking and providing payments for years and years, hundreds of years in many cases. And one thing that's I have a colleague who's from Texas, and he always talks about Texas tea, and the banking global financial institution market is in the trillions, 8.5 trillion. So again, reiterating the prize at the end of the disruption. And this is sort of an interesting fact from Accenture that they're estimating that full-service banks, meaning the banks that offer sort of consumer banking and payments and things like that, similar to like Bank of America, JP Morgan, Wells Fargo, et cetera, could lose 35% of their market share globally to digitally oriented disruptors. And sort of to Bruce's point earlier, it is digitally that these guys are getting bringing their solutions to market.
Yeah, I would say the two other factors that are primarily involved that we see with respect to a lot of the fintech disruption is one is I think a lot of these solutions are offering speed and simplicity. And I think that almost everybody on the call probably has a personal experience of dealing with a traditional financial institution that in terms of how long it took to finally get a product delivered or to get your mortgage refinanced or whatever it is, many times it's kind of a long, cumbersome process to go through that. And so a lot of the business models that we see that are being successful and getting traction, they really focus on speed and simplicity in terms of delivering the product. And the second one, which Ritika referenced a little bit earlier, but I'd just like to highlight a little bit more, and that is it's really around the user experience. I think that a lot of the fintech disruptors are very focused on starting with an experience that the consumer or the business expects to get that's maybe a little bit more aligned with what they would get from another software company or another technology company, as opposed to trying to kind of just provide a better financial services product. Many times it's not focused on the product because, as I think everyone would agree, many financial services products are very commodity-based products. There's not a lot of differentiation around a checking account or a debit card. However, there can be massive differentiation in the user experience in using the products. And so speed, simplicity, and the user experience are kind of the real key areas that the innovators are focused on in trying to get market share.
Yeah, and that's a great transition to sort of the macro level themes that we see really the trends shaping the fintech landscape. And so we talked a little bit about some of the technology that's fueling the disruption, right? The barriers to entry for entering in and bringing a startup to market are significantly lower than they have been in previous years, thanks to wonderful things like the mobile devices and the iTunes the App Store, where you can just get your product in front of millions of eyeballs pretty quickly, as well as things like being able to host your service in the cloud without having to invest a whole bunch of money in infrastructure to bring your solution to market. And then lastly, leveraging the networks, the networks, the social networks, and the other kinds of networks to distribute your solution to market. So leveraging services like Twitter and Facebook and Medium and all those other channels to really distribute marketing at a very, very low cost have made the barriers to entry significantly lower and have really helped to fuel the innovation. there's also a big trend around trying to remove paper, and this is sort of along the lines of removing friction from processes and shifting from paper to electronic. The idea that checks will leave our ecosystem is a reality that I really hope happens one day. But in the interim, the technology around remote deposit capture has made accepting checks easier, and people moving to more cardless, to a more cashless, to a card-filled society is really is happening significantly across business and consumer. Businesses like electronic payments, because of the richness of data that goes along with transactions and reconciling data and removing humans from being in the position to constantly move paper through processes is something that businesses have been looking for a long time. So this shift from paper to electronic is pretty significant.
So one other comment I would make, I've tried to synthesize 4 or 5 questions with a common theme, and I think the common theme is around people understanding the value proposition around ease of use and simplicity and speed, but talking a little bit about how this works in terms of the current products that you use on a day-to-day basis. And I think on a day-to-day basis, what we're seeing with a lot of the fintech disruptors, again, that's a common trend, is they're embedding the payment experience directly into how you do commerce on a day-to-day basis. And I know Uber is a very overused example in the innovation economy, but they are kind of a perfect example of how they have embedded a financial product, which is a payment experience, directly into how you use their product. And there are many other examples with Amazon and Apple and many others where, again, I think that what we see happening with a lot of the disruptors is they're actually pushing payments more into the background. It's less around making the payment. It's more around making the payment digitalized and embedded in with the commerce experience. So the payment is much more of a utility as opposed to a product. And really, again, going back to what we talked about earlier, it's about the user experience. And many of the models that are doing a great job of, again, elegantly embedding the financial product into the experience that you're doing, so you don't actually even have to think about making the payment or executing on the financial product. Like another example is in the small business lending, what we have seen is some fintech disruptors that are doing a great job of you actually never apply for a loan. They just look at everything in your accounting system. They look at your accounts receivable. They go ahead and qualify which ones they will advance credit on. And then it's literally as simple as pressing one button to say, yes, I would like to get an advance on my receivable. So again, what they're doing is taking the financial product itself and taking so much of the friction out of what you do to kind of apply and qualify and use it and embed it into kind of your day-to-day working experience or your social experience.
Yeah. And sort of the last big trend that's really helping to shape the fintech landscape is the regulatory environment. So, one thing that we've been talking about is when the, Great Recession happened, banks sort of took a step back and started to divert resources away from driving innovation and driving new products and services and focused more on compliance and making sure that they, safety and soundness was sort of the big mantra of the time, and it always is in the world of banks. But that left open a big gap in terms of innovation, right? So that it was the big gap that allowed for all the disruptors to come in, is that when banks stopped thinking about how do we innovate, and Bruce will say that banks are not really good at innovating in general, but when they completely stopped thinking about that, that's really when the whole world of innovation came out, just the general dissatisfaction with banks that came out of that crisis, as well as the focus on regulatory compliance. And, the world of regulation is not easy by any chance, right? So the emergence of the CFPB happened during that time, where there's a very strong champion out there for consumer protection, and then there's, in the world of payments, so you think about things like money transmitter rules and regulations. It's a very complex ecosystem, and the financial institutions are sort of the sort of gate in and out of the payments network. So the disruption that's happening and the successful disruption that's happening is in many ways in partnership with banks, helping to innovate around the front-end experiences and the back-end experiences while leveraging that infrastructure in the middle.
Yeah, so a question that just came up very similar to what you were talking about, Ritika, is what are the disruptors doing to actually streamline and innovate the regulatory process?
Well, I don't know if they can streamline the regulatory process, but the way that we've seen the disruptors work around or within the regulatory framework is, focusing on the front-end pieces, right? So if you think about the infrastructure of payments, I'm a payments nerd, I'm sorry, I can't help but not think about it that way. But if you think about the infrastructure of payments, there's ways to get into that infrastructure, and it typically goes through a bank. And so the the innovators that are being successful at it are partnering with banks to get access to that whole world of payments infrastructure, and looking at their services as thinking through compliance and regulation and monitoring and all of those things makes them, a very solid, stable player in the ecosystem.
Well, one other thing I would add that has been interesting to watch, and it's related to a few other questions folks have in here around kind of cost of switching, and it sounds great to move over to some of these other solutions, but how frequently do I now have to re-enroll and do all of that? And again, I think what we see happening here is just leveraging digital and leveraging data that you already possess is a far more efficient way to do those things. So to Ritika's point on the regulatory side, there is a specific subsector called RegTech of companies that are actually trying to streamline and automate some of the processes. And it's really about, when you think about it from a consumer and a business perspective, a lot of the data that banks or financial services ask for, you already have that data, but they don't make it easy for you to make that data portable to just go ahead and give them what you need. So everyone probably has a lot of sore fingers from having to key so much into various online sites and various mobile devices to provide data that actually is already digitalized somewhere, probably in your mobile device or in your digital wallet. And again, I think whether it's in the reg tech space or actually just some of the models that we were talking about earlier, I think they're doing a very effective job of minimizing the frequency in which you have to provide them data that they can get through another way, through your consent or through your permission, to allow you to go ahead and provide data. And I think that has a huge impact in terms of the cost of switching. I think that there's a direct correlation that the more information you have to provide around buying a product, your abandonment rate. I mean, there's a lot of statistics around abandonment rate with e-commerce shopping carts, that the more data and information you have to enter, the more frequently you're going to abandon that. I think what a lot of these fintech disruptors are doing are minimizing the amount of data that you have to provide so that you can quickly get to a buy and move your business over to their product or their platform.
Yeah, and I think that from a switching perspective and a management perspective, getting your data moved over or getting your sort of enrollment process is one thing, and being able to manage multiple different services that you've got, so you're piecing together sort of a banking solution is something else that has changed dramatically with some of the advances that we were talking about in terms of technology. So before, people would want to concentrate all of their banking and the financial services need with one entity because the overhead of managing all of these different relationships and entry points was so high. Now you've got an app for all your services. There's notifications that come out, so there's not the need to have everything so concentrated with one financial institution. You can have solutions that you manage through one interface, which is your mobile phone. That's making that switch easier and sustainable. So, I think I saw a few questions around how are banks responding to all of the disruption that's happening. And, I think that there's a wide variety of things that are going on in the market, but one of the things that we see a lot of is just some of the banks setting up their own fintech venture capital funds to make sure that they're looking and partnering and making investments in companies that they can, either learn from, be strategic partners with, et cetera. So you can see here that back, from Q1 of 2015 to 2016, there's been, a wide variety of banks that have participated in this strategy, either by setting up separate funds or just within their doing some balance sheet lending as well. And fintech investments last year was an all-time high of $11.4 billion, and despite some of the easing that's happening in funding this year across the entire technology sector, fintech is continuing to see the levels of investment that it had seen and is expected to be even higher in 2016, primarily fueled by later stage rounds in companies, and we'll talk about some of those companies in a minute that are seeing some of those bigger rounds coming through to help sort of grow and accelerate their businesses. Is there anything else you'd add on this one?
One of the some of the questions that came in were related to which you spoke on the last slide, Ritika, about what are the incumbents doing? They see a lot of new startups coming into the space. They're trying to basically offer competitive products. In addition to the investing that Ritika spoke about a little bit earlier, I think one of the fundamental challenges banks are going to have to deal with right now is how they think about their brand in the market in the future. And so the reality is fintech has actually existed for a long time because financial services buy a lot of technology from software companies and from hardware companies. There's actually been a sector that's been in existence for a long time of companies that specifically build products and sell them to financial services companies. However, the model in the past has always been we sell it to the financial services company, and then they white label it or they rebrand it with their brand, and then they put it out in the market. What's been the real fundamental shift over the past 3 or 4 years are fintech companies that are going directly to consumers and directly to businesses. And I think a lot of financial services providers, going back to the last slide Ritika spoke to, recognize that there's a need for them to probably partner differently with some of the fintech disruptors. But I think that this key question of are they going to allow their brand to coexist or are they actually going to allow their brand to maybe be pushed into the background and to allow one of the disruptors' brands to be in front of the client is a key decision point that a lot of financial institutions are grappling with.
Yeah, and they're looking at it from a demographic by demographic perspective as well, right? So what's that number again? 70% of millennials would rather go to the dentist than go to the bank. So, there may be a different strategy that you take with certain demographics around putting a startup brand more forward, in the forefront versus somebody in a later stage of their life that is more comfortable with the bank's brand being in front. So, so there is, like we were talking about, a lot of money going into the financial services or fintech ecosystem. And the one thing that we want to just talk a little bit about is that most of the value has yet to be realized. There have, obviously last year were some exits by OnDeck, Square, Lending Club, IPOing, and we'll talk a little bit about Lending Club in a little bit. I think I've seen a few questions come through on that. But then there's this whole world of other companies, some would call them unicorns in the fintech space where the exits, there have not been exits and there's significant value to be realized.
Yeah, so one of the questions that just came up that I think is a good question related to everything we talked about is kind of the demographics of fintech clients, whether it's consumers or businesses. And again, most of the industry data that we look at, as much as there's a lot of hype about it's really the millennials and the digital natives that are driving a lot of the adoption, actually we see it across. I think that the reality is I'm personally a Gen Xer. I'm not a millennial, but it doesn't matter to me. A really good digital experience is a really good digital experience. And if somebody can provide a product or solution that is going to take 90% of the friction and the time I have to spend enrolling or utilizing that product, it's appealing to me. And I don't think that that's very different across the different demographics. So in terms of what the adoption rate has been and what the penetration rate has been, on the average it is higher with millennials, but it's probably not as big a chasm as people would think with respect to Gen X or baby boomers. They're adopting a lot of the digital products just as quickly as anyone, and I think probably less around financial services, but I think the real great use case of this is Facebook. I think probably 6 or 7 years ago, if you asked people who would be using Facebook from a demographic perspective, everyone would think, well, it's young children. Actually, what you see is it's got tremendous adoption with the baby boomers. I mean, so I don't think financial services tech is going to be much different. I think as long as they can provide a great digital experience and remove a lot of the friction. And probably the last comment I would make with respect to Ratika's point on most of the value has yet to be realized. I think that we're still in what I would call an early stage of seeing how these companies are going to be able to scale to become very large, sustained operating models. And it's not because none of them have done that yet. Some of them have done that really well, but most of these companies have just formed over the last 5 to 7 years, so it's going to take some time to see how they actually scale and how they become very large, sustainable organizations.
Yeah, the other point I would make about sort of the demographics is several of these companies on here, like Coupa, for example, is a B2B solution, right? And so as the world of business professionals are seeing the technology solutions sort of disrupting and transforming the way that they're able to do their work or, save time and money, et cetera, then it's going to trickle through to the consumer side as well. So there is also that, because it's not just a consumer-only disruption, it is on the business side that there's, it has the potential to reach the broader populace. The one thing and I've seen a few comments up there as well on this, is that the ones that have exited, sort of the OnDeck, Square, Lending Clubs of the world, it's hard to ignore the fact that they've struggled a bit amongst the current market conditions. And I think that there's a variety of reasons for some of the struggles. There's just general market instability that's been going on, as well as just some of the things that have happened with some of these companies in particular. So,
yeah, I think it's very early still. I think this chart will be interesting to look at over the next 3 to 5 years. And again, I would say if you go back and look at other areas around innovation, you look at the early days of when Apple became public, or even when Facebook became public initially, some of the challenges of going from being a private organization to a public organization. So I think that there's not enough data points right now to come to a conclusive position on this. But I do think that because of this, and there's a broader macro thing going on right now, there's just less IPOs going on right now. There's less companies that are going public. So I think in terms of understanding the long-term sustainability and market value proposition of many of these business models, it's probably going to take another 5 to 7 years before we really truly understand that.
Yeah. Right, and so because of this, because of some of the early indications that are going on with the companies that have IPO'd, it is trickling down to the private market. I mean, given the position that we have in the ecosystem, we have seen some of the some companies sort of pull back a little or have down rounds relative to the recent fundraising that they're doing because of the early indications on these companies. But to Bruce's point, right, it's still early days. However, we are seeing it.
Yeah, one of the other things I think is unique about this sector, and I know there's been a lot of questions about regulatory type questions around these companies. I think that first and foremost, if you just take a step back and look at the venture-backed startup community, the reality is companies will fail. That's part of the innovation ecosystem is the reality that many startups will not be able to get traction, will not be able to move their business model forward. I think what's a little bit different in this sector is because there's regulatory elements, because it involves financial transactions, there's a different type of scrutiny around failure in this particular industry. I've personally spent quite a bit of time with regulators over the past year talking a little bit about how they are going to approach regulating the fintech community differently than banks, because the reality is the main goal of a regulator for a bank is to ensure they don't fail. And the reality is within not only fintech, but within the venture-backed startup community, there will be failures. I mean, that is part of the innovation ecosystem that happens. And in many cases, actually, it's celebrated to a certain extent, the fact that failure will absolutely drive more innovation. If you're not seeing failure, you're probably not taking enough risk and you're not innovating. So I do think that's a particular area. Again, the regulators are going to have to really figure out probably a different type of model for this sector, because trying to just overlay the bank model, where the bank model is heavily predicated upon you will actually never fail. If they overlay that model onto the fintech companies, they probably will suppress a lot of innovation. At least in the limited conversations I've had with some regulators and some government officials, they fully recognize the need to have a modified regulatory model around these companies, because they are not banks, and they shouldn't hold them to not a similar standard, but they shouldn't try to overlay the exact same regulatory model, or it probably will suppress innovation.
Mm-hmm. Yeah. Oops, wrong button. However, given some of the challenges that some of the disruptors are seeing in the fintech ecosystem, fintech will persevere and the best companies will continue to disrupt. And so, I think that there's, like what this slide is sort of going through is, there's companies that are sort of in their early days and are presenting sort of significantly new, unique value propositions to the model and are starting to gain traction. Sort of the next tranche is where they've gotten sort of significant traction in their particular markets, and then finally, the sort of the top share category is really interesting and are getting gaining significant strides. One of the trends that we're seeing, which is really sort of prevalent amongst this top tier or this top share category, is they have entered the market in one particular segment. Say like SoFi, for example, they started their model with lending to MBA students from the top 25 institutions in the country, and then have taken a broad approach to product development across more of financial services. So the first slide we started with banks becoming unbundled and point solutions addressing every single aspect of banking. Now we're seeing disruptors that started with that approach of let me unbundle, let me do that one thing better, faster, more seamlessly, and they're coming back and rebundling some things together in order to have a more holistic solution to offer to the market. So we see that pretty much in all of these companies, that they are going back and trying to rebundle more things together in order to continue to drive the market.
Yeah, I would say the other point to that that most of these companies are doing, and again, it's very consistent with what you would see across the innovation startup community, and that is they try to get some product in market as fast as possible to ideate and learn. And again, I think that where one of the challenges that the incumbents have is if you think about the model today around product design, product development, introducing something into the market, it's a very long cycle for a traditional financial institution to do that. A lot of them are thinking about accelerating that cycle, including our organization, but I think the model of developing, finding a pain point, like Ritika said, or finding a point of friction, quickly getting a product into the market and then doing rapid ideation on that and then doing horizontal product expansion off of that gives them an opportunity to quickly respond to changes in the market, quickly respond to client expectations. And again, most of these companies on here will be releasing product on a weekly basis, if not on a daily basis, which is very unusual for a financial services organization to do releases that quickly of enhancements and new features. And I think that's a clear point of differentiation and advantage that they have in the market right now.
So I think that's it in terms of what we've got from a prepared material perspective, but I know there's a bunch of questions.
A pretty intriguing question is, will there be a point where banks are no longer needed? And it's something that we spend a lot of time talking about, less around whether or not banks will be no longer needed, but what could potentially be the future role of traditional financial institutions. I'll start and then I'll let Ritika weigh in here. So how we think that this potentially is going to evolve is, so first and foremost, financial institutions have a lot of incredible assets and infrastructure. They have trillions of dollars of federally insured deposits, which are basically the oil for the engine to do lending and to do payments and to provide liquidity services. So they have an incredible asset with respect to their balance sheets, their infrastructure, the fact that they are regulated, they are trusted, they have access to a lot of the payment clearing and settlement systems, which are incredibly valuable. So what we think about is kind of the distinction between all of the great infrastructure services that a bank can provide and then kind of the consumer-facing products. And not the best analogy, but one of the things we think about all the time is kind of how Apple has evolved their model. And it's really interesting. Apple, either the largest or second largest, I haven't looked today on their market cap versus Google's, but in terms of what they provide in terms of an operating platform. And I think people, they think about their Apple device, but the reality is they're using so many other products that are built off of the hardware and the operating system off of the Apple device. And so I think that what we could see evolving with some financial institutions is them being maybe more of an operating platform provider, allowing a lot of other software or client-facing technologies that, again, can leverage their infrastructure, can leverage their assets in a way that they can still monetize that, provide some very valuable services, but get the network effect. And I'm stealing a little Ritika's thunder because the network effect is something she talks about all the time, of actually having other companies that are out there originating business for you off of your platform or off of your infrastructure. So we see kind of possibly not for every single traditional financial institution, but for some kind of an evolution to a model like that. But in terms of the broader question, will banks need to be in existence? Some form of an entity that can manage federally insured deposits on behalf of consumers and can provide some of the major infrastructure services, we think will be a necessity.
Yeah. No, I mean, I think that you've pretty much summarized what I was going to say as well. But, I did kind of allude to it earlier, is that companies today, the startups today that are successfully innovating and successfully disrupting in the back end are actually partnering with many banks. And, we are a bank that will work with a startup and help them gain access to the infrastructure that helps power the ecosystem while they spend the time and energy focusing on the front-end experience and gaining that network effect of reaching a broad customer base with their particular solution. So, yeah, I'm very much in agreement that I think that, that infrastructure is still going to be very important in the future.
And there have been a lot of questions about whether or not this has been recorded and whether or not the materials will be available, and yes, they will be available, correct? Okay. The recording will be available. The slides will not be available. So another question that just came in, which is pretty interesting, is trying to summarize this. It's kind of a long question, but in terms of what we have found through our own experiences is the most valuable ways to improve the user experience or UI, since a lot of this comes down to the experience. Well, I'll let you start with that one, Ritika, just in terms of what we've seen in terms of working with fintech companies and venture-backed companies on how they approach that maybe a little bit differently than the incumbents.
Yeah, I mean, I think that one thing that we see in, I mentioned that I run the accelerator program in conjunction with MasterCard called Commerce Innovated, and so we see some very, very early stage companies that come with their ideas and, their businesses and help to bring to market. And one thing that we see predominantly among those companies is they're all trying to solve a particular pain point that they've experienced themselves, from frustration that they've got with the UI or UX that they've been struggling with. So they bring that sort of personal experience and that personal perspective to the solutions that they bring to market. The other thing is they're taking influences from technology companies instead of banks. So it's the how do I vote things up and down in Facebook versus how do I express preferences in the world of banking, right? So they're taking cues from the ecosystem of technology providers that they like and pulling those together and sort of driving unique experiences.
Yeah, and I would just say the last thing, and it's a little redundant from what I said earlier, is they start with customer or business expectations first, and really kind of the design process starts with the experience with the customer or with the business, as opposed to the design starting with a product. And that's kind of a profound difference in user experience development, is really starting with the overall end-to-end experience that you're trying to deliver. And to Ratika's point, most of the time it's around solving a pain point or eliminating friction from the process. And then the product is kind of built from there. The other thing that I think that they do very well, the ones that do this very well, is have a recognition of the necessity for backwards compatibility. And what I mean by that is a lot of these things that a lot of these models are built on other infrastructure, or they have to have access to existing clearing networks or existing payment networks, and creating that level of backwards compatibility is very important. So again, I think they start with trying to design a user experience first, and then ensuring that there's backwards compatibility about how that then is engineered and configured to work with an existing. So again, many times it's just about building a complete abstraction layer between the consumer and all of the kind of friction that can be created around the product. Another interesting question that came up was around PayPal in terms of their role around the fintech revolution. And I would say that they're one of the pioneers. So I think PayPal is unquestionably one of the first companies, one of the first fintech companies that did have a consumer direct product and a small business direct product. And again, if you go back, and it's been a while, but they were solving something very, very specific, but was very challenging, and that was how could individuals exchange value between each other if they weren't physically with each other? And as much as we take that for granted today, the ease in which that didn't exist back then. So the idea of if I was in one physical location and Ritika was in another physical location and we wanted to conduct commerce, it was really difficult to do that. And again, combined with kind of the birth of eBay and the idea that there could be a digital marketplace that people could go to conduct commerce, I think that absolutely was a key aspect of helping PayPal get launched. But they solved something that was really big, and that was how to create a digital experience where stored value could be exchanged between two individuals that not only are not physically in the same place, but don't even know each other. You know, they created a trusted network where they could be in between two individuals who wanted to conduct commerce and really kind of facilitated a way to do it digitally that really didn't exist prior to that. So they were really incredible pioneers, and they're obviously an unbelievable success story just in terms of going back to what we talked about earlier about can these companies build sustainable, growing organizations. I think PayPal has absolutely proven to do that.
Yep.
One or two other questions?
Well, there's a question in here about stage do you recommend a fintech startup to approach venture capital, a VC, to raise money? And there's a few different answers to that question, and I'm sure Bruce has got some opinions as well. But I think that today there's venture capitalists tend to look for specific factors when they're investing in a brand new company at earliest stage. And I think today there are so many different ways to raise capital outside of the traditional VC model based on the level of experience that you've got bringing new ideas to market. Some of those alternative methods might be a good way to get started, right? There's angel investing, there's crowdfunding. You know, we talked a little bit. Kickstarter was on one of our slides. There's AngelList, et cetera. So there may be a point where some of those alternative methods of getting some seed funding in place might be a better strategy than trying to go straight to a VC firm to raise money to get your product off the ground, and then bringing in somebody of a more strategic nature like a venture capitalist to help you when you're at an inflection point is more of what we're seeing in the market. You know, for brand new founders. For repeat entrepreneurs, it's you know, going directly to a VC is still happening.
Yeah, the last comment I would make since we're at the top of the hour is I think for fintech companies in terms of getting venture funding, two things that they probably have to do that's a little bit different than other venture-backed tech companies is one is I think they have to prove that they have to show and demonstrate that they've got a robust compliance, risk management, and security. And I would understrike security because, again, you're now dealing with some element of financial transactions. And I know there were a few questions earlier about cybersecurity, and I think cybersecurity is important in almost any industry, but in this particular industry, it is at the absolute top. And the last comment I would make is I think that you really need to demonstrate that you have a client acquisition and, more importantly, a client retention model. One of the things around fintech that, again, is slightly different than some of the other tech models is it can't be a transactional model. It has to be a relationship model where you're going to get sustained, continuous transactions from the individual on your platform, and showing that you can not just do a single transaction with a consumer, but you can actually have a model that you can continue to sell to that consumer is very important. I think we're at the top of the hour.
I think so. So again, thank you, Ritika and Bruce. Very informative and enlightening. And thank you all for attending. I hope you will come back again soon and attend one of our other webinars. So have a great day wherever you might be in the world at this point.
I would like to introduce today's speakers. Larry Lagerstrom, who you'll be hearing from later in the session, is the Acting Director of Academic Programs, responsible for graduate education offerings. Today's featured presenters are Bruce Wallace and Ritika Grewal from Silicon Valley Bank. Bruce Wallace is the Chief Digital Officer of Silicon Valley Bank Financial Group. He is responsible for client digital banking experience and channel delivery services, along with the sales, development, and delivery for fee-based products, including payments, cash management, cards, merchant services, foreign exchange, and global treasury services. Previously, Bruce was Silicon Valley Bank's Chief Operations Officer, responsible for global operations and IT. Prior to joining Silicon Valley Bank, Bruce spent more than 20 years in a variety of management positions with Wells Fargo and Company. Ritika Graywal is the head of Payments, Strategy, and Solutions at Silicon Valley Bank. She joined the company in 2012 to lead the Payment Strategy and Solutions team. This team focuses on internal payment strategy and development, as well as working collaboratively with Silicon Valley Bank clients and partners to help deliver payment solutions to the market. She leads Silicon Valley Bank's partnership with MasterCard to run Commerce.Innovated, an accelerator program focused on helping early-stage companies innovating across the commerce space. Prior to Silicon Valley
payments, as well as changing the way that people accept card payments, and then on the lending side, companies like Cabbage and OnDeck helping small businesses get access to capital in unique ways. Is there anything else that you would add on this slide?
Just one thing I would add at the macro level is I think what's happened over the past, I would say, 3 to 5 years with a lot of these companies is every single one on there is a pure digital solution. So I think what's happening is there's a lot of disruption specifically around companies coming into the financial services space without the traditional infrastructure required with a purely digital or mobile-based experience.
Okay. Yeah, and we're going to talk a little bit about some of the main disruption that's, or some of the main drivers that's causing this inflow of disruption, and we will talk a little bit more about how digital comes into play here. So the next slide is to sort of see the parallel that's happening in the UK. It's a very similar trend where, again, consumer banking, business banking is being disrupted by a whole slew of startups. You know, obviously the Brexit news is fresh in everyone's mind, so it's a little, it'll be interesting to see how this evolves. But, you know, given that SVB has an office in London, we get a good front row seat into seeing a lot of this as well. And it's, again, very similar in nature to the disruption that's happening on the U.S. side, and attacking pretty much every aspect of banking, lending, investing, et cetera, that consumers and businesses are focused on. SoFi and others, as well as on the banking side, some of the banking startups that are trying to disrupt the way that consumers receive just the basic services that come along with a bank account, companies like MoveIn. There's a slew of companies focused on the savings side, savings, wealth management, you know, companies like Digit that help to automate your savings, companies like Betterment, Wealthfront, et cetera, that are focused on that wealth management space. And then finally, there's a whole world of companies that are focused on sort of the payments aspect that, from a consumer perspective as well. Companies like Bill.com to help people make bill payments easier, cleaner, and with a beautiful UI in front of it. On the small business side, there's you know, even more pronounced disruption that's happening from, again, same thing where pretty much every tab of that display from the Wells Fargo example here is being disrupted. You can look at, again, banking, lending and credit, merchant services, insurance, all of those things are all being disrupted, again, by a wide variety of services. Some of the more well-known services, because they've IPO'd or are out in the market really aggressively, companies like Square that have truly disrupted the way merchant services are being delivered, giving small businesses, extending the aperture of small businesses that are able to accept card payments.
Yeah, so there were a couple questions I think were pretty interesting that came up related to the first two slides. The first one was, where is blockchain? So in terms of what's happening with the percentage of startups that are in blockchain or digital currencies, and in terms of overall venture investing, there's been approximately $1 billion that have gone into blockchain startups. And in terms of where it stacks against all of the other startups that Ritika had been referencing earlier, it's probably about the 6th or 7th largest sector. In terms of where a lot of the investment dollars are going right now, it's primarily going in the lending space. It's going into the payment space, and it's also going into kind of a combination of individual finance, consumer finance, and then also into different types of investing, individual investing and consumer investing, business investing. But if you look at the trajectory around investments in blockchain technology, it is on a very high trajectory, and in terms of what's happened so far in the first half of this year, there has been no tampering of investments going on in Bitcoin and blockchain. And the second question was related to emerging markets such as Africa, Latin America, Asia. I would say, again, in terms of investment dollars, probably about 75 to 80% of the overall venture investment dollars for FinTech are primarily going in North America, in the UK and EU. I think in terms of some of the emerging countries, because they still have a very...
Bank, Ritika was at JP Morgan Chase. Ritika was recently awarded as one of the most influential women in payments. Actually, she won this honor for the last 2 years. At this time, I'd like to turn the floor over to Bruce and Ritika.
Good morning, everyone. This is Bruce, and we are excited to be here this morning to talk about what's happening with the FinTech revolution. So we're going to have some slides that we're going to walk through. As Beth had mentioned, we'll be more than happy to answer questions throughout the course of the presentation, and actually would recommend that you provide questions throughout the course. So I'm going to turn it over to Ritika, who's going to start stepping through the presentation. Ritika?
Great. Good morning, everyone. So I'm going to start first with a slide that we received some data from CB Insight, which is an analyst firm. And what is going on in this slide is really to help illustrate the FinTech innovation is here. What they did was use the Wells Fargo homepage as an example. The top half is the consumer homepage, and the bottom half is the small business homepage. And really describe all of the different companies that are innovating and attacking every single segment of banking, from lending to banking services themselves to investing. There are a slew of companies that are going after and truly disrupting banking as you know it today. On the consumer side, there's some names that I'm sure you've heard of in the markets, right? On the lending side, companies like